Oh, Ruchika live. Oh, sorry, Parul, we are live.
So we can share the link. Someone can share the link on the Telegram so that participants can join.
Okay, okay. No issue. Yes, Parul, you can start.
Okay, sir.
Parul, you can start now, Parul.
Okay, sir.
Hmm.
Good afternoon, everyone. Today, I, Parul Yadav, welcome our resource person and guest for the day, CA Atul Kumar Gupta ji, and all the participants for this session on fundamentals of GST. We are extremely thankful to you, sir, for finding time for us in this refresher program. Before I invite Sir to speak on the topic, I would take the opportunity to briefly introduce Sir to our participants. Sir, President, the Institute of Chartered Accountants of India, has been elected as the board member of International Federation of Accountants, IFAC, for a period of 3 years. A man with astute intellect, quick understanding, and sharp vision, CA Atul Kumar Gupta ji has served the profession for nearly 2 decades, and he joined the Central Council of ICAI in 2013. Widely respected for his strong organizational skills and deep insight in the affairs of profession, CA Gupta ji has immensely contributed to the cause of profession during his term in Central Council and earlier as Regional Council member and chairman of Northern India Regional Council. A commerce and a law graduate by education, CA Atul Gupta ji has imbibed a unique perspective to view and critically address the matters. He is known and appreciated widely for his key contribution as facilitator of goods and service tax regime, particularly in its formative years. Under his stewardship at Board of Studies, the new scheme of education and training that was benchmarked with the revised international education standards was launched in 2017 with thorough revision of the content of the study materials and of intermediate and final level courses. He earlier has been chairman of SAFA Committee on Education, Training and CPD and director of XBRL India and ICAI Accounting Research Foundation ARF in the past. Through ICAI ARF, he is credited for the promotion of agenda of research in the profession. After anchoring the ICAI ARF team in the project of preparation of accrual-based financial statements of Northwestern Zonal Railways for the year 2014 and 15, CA Gupta has mentored the team in project of preparation of accrual-based financial statements of Indian Railways for the years 2016 and 17 as well. Under his chairmanship in the year 2010 and 11, the Northern Indian Regional Council of the Institute got Best Regional Council Award. As the president of the Institute, he is now the chairman of all standing committees, including executive, finance, and examination committees, besides the ex officio member of all non-standing committees of the Institute. CA Atul Gupta ji is also a member of many other prestigious committees constituted by the Government of India and regulators related to policy formulation that includes CNAG of India, IRDA, SEBI, etc., to name a few. On international front, he is board member of South Asian Federation of Accountants, representing ICAI in International Integrated Reporting Councils. With his deep insight of the affairs of the profession, CA Gupta has always kept the profession on high priority at national as well as international levels. We welcome you, sir, and we are really thankful to you for finding time for us. Looking forward to hear you. Over to you, sir.
Thank you, Parulji. And I believe that we are waiting for the participant to join, Dr. Sam, or
No,
we.
no,
I
sir.
should say.
No, sir, you can start, sir. They will join you, sir.
Okay.
Sir, actually, the participants will be joining on YouTube directly. They'll not be joining us on Zoom link. They'll be joining directly at the YouTube platform.
Okay. Now, my dear friends, very respected Dr. Rajiv Nayan ji, Parul ji, Principal Saab, SP Agarwal ji in absentia, and all my distinguished faculty members. I'm happy to be part of this faculty development program. And as usual, I will be speaking on a very important topic, which is very close to my heart, is the GST, that is the Goods and Services Tax. My dear friend, I appeared many times before all of you as a faculty for the GST, specifically as far as the faculty development program is concerned. And I always start from a scratch that what is GST all about and what is this 6-year journey we are going to capture in the next 70-75 minutes time. And then as per the guidance given by the Rajiv ji, that the 10 or 15 minutes will be available for all of us to take up the queries or the doubts of our participants, which may be coming through the Q&A or a chat box, whatever way it will be feasible and the technically acceptable to the organizer. Now, my dear friend, as far as the GST is concerned, you are aware that it was introduced on the 1st of July 2017, while subsuming more than 17 center and the state level taxes related to the indirect taxes. Now, my dear friend, what was happening that whenever you are doing any manufacturing or you are doing a trading or providing any service, there was an indirect tax involved apart from the direct tax that we are paying on our net profit. So say, for example, you are selling for 100 rupees something and you are earning rupees 10. Now on that 10 rupees, the income tax will be leviable as per the slabs. That is a separate issue we are not going to discuss. But when you are selling something for 100 rupees or providing any service for 100 rupees, that will also attract a tax called the indirect tax. And that was named as a central or a state level, meaning thereby there were certain taxes which were levied by the central government, say for example on the manufacturing or on the services, and there were the taxes, indirect taxes levied by the state government like the VAT, that is the value added tax was there. Likewise, there was the octroi, purchase tax, and many other taxes were there prior to the 1st of July 2017. So what was there? That there were the many taxes which were being imposed on as an indirect tax on the various activities made with the manufacturing, trading or service. And by virtue of that, the assessees were always there in a fix that which tax I have to follow and what will be the procedure related thereto. And that's why not only at the center level, but also because the different states were following the different procedures, there was always a challenge for an assessee to comply with all the central and the state level indirect taxes and see that there is no lapse on his part. Now, my dear friend, looking into this particular aspect that you have a lot of interpretational issues, procedural issues, and that is not offering an ease of doing business. While the cascading effects are there, the government introduced on the 1st of July 2017 a new regime called as Goods and Services Tax. Now, before we move further, there will always be a question in our mind that what is this GST all about? Though we have started teaching, we have started reading this law, but again, there will be the confusion in the mind of our beginners that what is this GST all about? What at times you are discussing about the valuation provision, sometimes you are discussing about the ITC. So I'm always confused that, okay, where to study and how to study the GST law. So my dear friend, but to help out this particular aspect, I try to prepare a very important and in a very lucid way, a very simplified format of the bird's eye view or the helicopter view of the entire GST. So my dear friend, whenever we are looking for a GST, understand the GST, the first and the foremost aspect which required a understanding on our part, that is what is the incidence of tax, meaning thereby which activity will attract the GST and which activity will not attract the GST. Now, my dear friend, normally what will happen that if a layman will go to a chartered accountant or to a cost accountant and will ask, they will start simply check what will be the rate of tax on this particular activity. But what I'm trying to convey you, that before we go to the classification, before we see what will be the rate of tax on this particular activity, our role should be that to first ascertain and evaluate whether this activity attracts the GST at all or not. So my dear friend, to check that particular aspect, the activity should be a taxable supply. Now, my dear friend, if an activity will have a taxable supply, it will attract the GST. It's very simple. But now what will be the definition of a taxable supply is something that will be very interesting to learn. So first request to from my side to Parulji and everybody, that if you want to learn the GST, first of all, understand what is the meaning of a taxable supply. Because if activity is a taxable supply, it will attract the GST. Now, what is this taxable supply means? So, my dear friend, if I will go with the meaning of, try to explain you what is the meaning of a taxable supply, there will be a mathematical equation called as A plus B. That will be called as A plus B minus C minus D. What I'm trying to convey you, that there will be the A plus B, the A plus B minus C minus D will be equivalent to the definition of a taxable supply. So that will be called as taxable supply. Now, my dear friend, it will be again very confusing. What is this A, B, C, and D? So, my dear friend, if I define what is A means, so A means the activity which are falling under the definition of a supply. Now, my dear friend, what is this? Let me explain you. So, if I will take a bucket, okay, this is a bucket I taken and I named this bucket as a supply. So, my dear friend, as per the section 7 of the GST law, that any activity will be a supply if it fulfills the following 4 conditions. Please remember, please carefully listen me. If an activity will fulfill 4 requirements, then this activity will be called as a supply. Number 1, that this should be by a person. Okay, this should be by a person to another person. Number 2, there should be a goods or service. So in case an activity on which, say for example, you are selling, you are exchanging, you are doing a barter, you are doing a purchase of an activity which is neither a goods nor a service. So there will be a question in the mind of a Parulji, that meaning thereby that then what will be the activity? No, it will be like a immovable property. It will be like a actionable claims. It will be like a money, which is neither defined as a goods nor defined as a service. So meaning thereby, whenever you are doing any activity, whenever you are selling something, you are buying something. Manshabaji, I request you to please keep on yourself on mute. So I was saying that in case you are doing any activity, that should be either on a goods or on a service. Say for example, I am buying a pen. Now this is a goods. Or say for example, I am doing a audit. So that is a service. But if I am selling an immovable property for which the completion certificate has been obtained, in that case, that is neither a goods nor a service. And that's why that will not be a supply. Number 3, it should be a sale, exchange, barter, disposal. Okay. And number 4, there should be a consideration. In case there is no consideration, for example, normally if Atul is delivering a lecture, he is charging 10,000 rupees. But now since this is a university program and I'm saying that, okay, I will not charge. So normally what is happening, that it is my business or it is my business. Number one. Number two, there is a exchange that I am delivering this lecture and you are listening the lecture. And this is a service as well. And there is a supply of the service as well. But since there is no consideration involved, meaning thereby this activity is not fulfilling the criteria, the fifth criteria of a consideration in the entire this supply definition, meaning thereby this will not be a supply altogether. So my dear friend, for example, I am distributing the bread outside the temple. Now the bread is a good, but I am distributing that as well. That is the exchange of the bread from one hand to another hand. Bread is a good as well, but since there is no consideration, I am doing as a philanthropy, meaning thereby there is no consideration, meaning thereby there will not, the activity will not be classified as a supply. So my dear friend, all the activities which are fulfilling these criteria, meaning thereby they are goods, they are services, there is a sales, supply, there is a exchange, barter or disposal for a consideration by a person in the course or furtherance of business. In that case, that activity as per the section will be called as a supply. So what happened, Parulji, that below this universe, all those activities which are fulfilling these 5 criteria, I defined them as a supply under section 7 and put into the basket. Then there is a certain activity, there are the 4 activity wherein the consideration is not important. So even if there is no consideration, that activity will be classified as a supply. That is called deemed supply, which is defined under schedule 1. So those 4 activities, say for example, you have a laptop in your office. After buying the laptop for 2 years, but using the laptop for 2 years, you are giving that laptop free of cost to your employee. Now you will say there is no consideration because you are giving free of cost. But since on the laptop when you purchased, you claimed the ITC, that is input tax credit, the GST credit. You paid the GST. So 1 lakh rupees laptop you purchased, 18,000 rupees GST you paid. You use that GST against your output liability. And now you 1 lakh laptop you are giving free of cost to your employee. In that case, that will be called as a deemed supply. And in that case, you have to calculate the estimated value of that laptop and pay the service tax accordingly, even if there is no consideration involved. Okay. So that will be called as a schedule 1 activity, that is deemed supply. So meaning thereby, there will be the 4 activities further added into this bucket, wherein even the consideration is not there, but since they are classified as a deemed supply under schedule 1, they will also be called as a supply. Then my dear friend, minus C. Minus C is the exemption. So my dear friend, if you will go further in the GST, there will be a section 11. There will be the section 11 will be there, okay, which give the power to the government that in case you feel that the certain activity should be outside the purview of the GST. For example, if you are renting a residential property for use as residence, you are a charitable, you are doing certain charitable activity. You are a government, you are doing some activity. In that case, the government feels to promote that particular sector. For example, you are running a recognized degree diploma. In that case, whatever the fees will be charged from the student, that will not attract the GST. So to support certain particular activity or a sector, the government empowers themselves that, okay, I will do certain exemption. I will do some exemption to the activities. And for that, they issued the notification, for example, 12/2017, and exempted around 50 such activity and saying so that, okay, this activity though will be a supply that will be exempted from the GST. So that will be called as C. Now, my dear friend, as far as the D is concerned, what will happen? There will be a negative list. Now in the GST, there is a negative list which is defined under the schedule 3. And these are the activities which are defined as neither a supply of goods nor a supply of service. For example, employer-employee relationship. So if I am the employee of a Delhi University and I'm getting the salary from the Delhi University, in that case, that activity, though I may be rendering the service, I may be getting the money for that as well. So there is a consideration also. But since the employer-employee relationship activity is specifically classified as a negative list under the Schedule 3, they will be outside the ambit of the entire GST. They will not be classified as a supply of goods nor supply of service. Now, my dear friend, what I am trying to convey you, that out of all these activities which are put over here, I have the right to came out certain activities which are exempted and which are under the negative list from this box. From this bucket, I will remove certain activity which are either exempted or they are falling under the negative list. And what will happen? That the rest of the activity which will remain in the bucket, because they are fulfilling A plus B. Yes, I removed the C and D from there. And finally, now this bucket, the activity which will remain in the bucket will be called as the taxable supply. So, my dear friend, this is the way that they will be called as a taxable supply on which the GST will be applicable. So, my dear friend, by virtue of this type of a illustration or a clarification, I try to explain you that by virtue of this type of understanding, you will be able to understand that which activity will attract the GST and which activity will not attract the GST. Now, my dear friend, I'm through with this, that okay, what is supply means, what is taxable supply means. Now, what I have to do, that I have to understand the classification, because now I have to calculate that my activity is taxable. Yes. Now I have to go with which rate of tax will be applicable. And for the rate of tax, in case the activity is a goods, in that case, the HSN code will be there. That is the harmonized system of nomenclature. Or in case it is a service, then there is a called as service accounting code. So my dear friend, based on this classification principle, in case it is a goods, then HSN, or in case it is a service, then the service accounting code, you will be able to determine that what will be the right classification of my activity. And based on that classification, you will be able to understand that what will be the right rate of tax applicable on my activity. So say, for example, you are dealing in a pen and the pen is a goods, then you have to see the which HSN will be there. And based on this HSN, if you feel that the rate of GST will be 18%, so that will be a conclusion that my activity is taxable supply and the rate of GST will be 18%. Now, my dear friend, once you are through with this as well, now we have to go with this some kind of a compliances. Now, my dear friend, the first and the foremost compliance, which is there in the law of the GST, is the valuation principle. My dear friend, normally what is happening that if I am selling a goods for ₹100, I have to charge the GST at the rate of 18%, and 18 rupees will be the GST, will be their GST. Yes, it will be CGST plus SGST. There will be the division of the same as well. But my dear friend, the life is not so simple that every time the 100 rupees will be the value which we are talking about. No, there will be the situation when you are dealing with the agent, or you are transferring the goods to your branch or to your related person. Okay. You are getting certain amount as a OP, out of pocket expenses. So there will be the n number of situation when there will be a question, there will be a doubt in the mind of the authorities whether this 100 rupees you have declared as a value is the right value or not. And to understand that value or to determine that value, the government has introduced a section 15 coupled with the rule. There are around 7-8 rules starting from a rule 28, wherein they prescribed that in a different type of situation, how you will be able to arrive the value of your supply. It will not be always the case. Say, for example, the Parulji is going for an audit and he is charging 50,000 rupees as an audit fees. But at the same time, she incurred a taxi charges of 5,000 rupees. And she also wants to claim the 5,000 rupees from the auditee, the client. Now, my dear friend, whether the GST will be applicable on the 50,000 or a 55,000 is something, a question before all of us. So, my dear friend, as per the section 15, since the Parulji is claiming a reimbursement of out-of-pocket expenses for which she paid to a third party, that will not be acting as a pure agent and it will be a part of her value, meaning thereby the GST will be applicable on 55,000, not on the 50,000. So my dear friend, how I learn this concept? Because I refer section 15, read with the rule 28, 29, 30, 31 to understand that what will be the my right value of my supply. So my dear friend, we need to learn. We need to learn that in case my activity is taxable, I am aware about the rate of tax, what will be the right value on which I should charge the GST as well. Then my dear friend, the next question will be the which rate of tax I have to charge, which type of tax I have to charge. Now my dear friend, you will ask me, oh, GST is one, so which type of tax is what you want to say? No, my dear friend, since you are aware that our country is a federal structure, we have a central government, we have a state government, and the GST, when we are collecting from a customer, there are the two stakeholders of that tax. One is a central government, another is a state government. Central government is saying that, okay, give my portion. State government is saying, give my portion as well. So to answer this apportionment of the tax between the two parties, that is the central government and state government, the authorities devise a mechanism that is called the place of supply provision. Now, meaning thereby, let us understand what is this meaning thereby. Now, my dear friend, if I say that our country is a federal structure, I also has to say that the GST is a destination-based tax. Please note down this aspect, that the GST is a destination-based tax. Meaning thereby, it is a consumption-based tax. Now, what is this meaning by destination-based tax? Meaning thereby that if a supply will start from Haryana, let us say a supply will start from Haryana and will go to Punjab, in that case, who will get the tax? One is the central government. The central government will get the tax, no problem, that will be sure. But out of these two states, which state will get the tax? Whether it will be the Haryana or Punjab? It will be the Punjab, because the Punjab is the destination of this supply. So meaning thereby, it will be a destination-based tax, the consumption-based tax. Wherever the destination of the supply will be there, that state will get the tax. Now, my dear friend, let us take a two example. That in one case, there will be a supply from Haryana to Haryana. Now, in that case, what will happen? The government coined a system. In this case, when you are selling for 100 rupees and charging the 18 rupees as GST, it will be the CGST and SGST. So what you have to do, because this is an intrastate, it is an intrastate supply from Haryana to Haryana. So what will happen? The person will say, what will charge? He will charge 100 rupees plus 9% as CGST and 9% as SGST. So what will happen? That the central government will get 9 rupees and the state government will also get the 9 rupees, because the goods started from Haryana and ended in Haryana only. But now let us, my dear friend, take another example, that when you will say that the goods are not staying in Haryana, but what is happening, that the goods are moving from Haryana to Punjab. Now, the supplier is in Haryana. Okay. So he is selling for 100 rupees, charging 18 rupees as a GST, 9 rupees has to go to Punjab. So how he will pay to Punjab? How he will transfer this 9 rupees to Punjab, because he is registered in Haryana? How he can pay in Punjab? So to answer this problem, government devised a new concept called IGST, that is called integrated GST. Meaning thereby, whenever there will be a transaction from interstate transaction will be there from Haryana to Punjab, meaning thereby there are the two states involved. In that case, rather than charging C plus S, what you will charge? You will charge 18% as IGST And this IGST, what you will say, 18 rupees you will charge. The person, Haryana person will charge 18 rupees from Mr. X of Punjab and pay this tax to the central government. And what the central government will do? Central government will keep 9 rupees, 9%, that is 9 rupees with the central government, and 9% they will transfer to the Punjab government as a clearing house. They will transfer this 9 rupees as a clearing house, and that is called the concept of a IGST, meaning thereby the IGST is a sum total of a CGST plus SGST applicable on an interstate taxable supply paid to the central government, and then the central government will transfer the state portion to the state of destination where the consumption of your supply will be there. So my dear friend, it is very important that the Punjab government will say, oh, if you have by mistake, please listen my word, these words very importantly. The Punjab government will say that if you by mistake treated that supply rather than an interstate, you treated that supply as an intrastate, meaning thereby you are saying from Haryana to Haryana only. In that case, I will not get the tax, though the transaction belongs to the interstate. The goods are moving from Haryana to Punjab. So that's why you should understand when it will be an interstate and when it will be an intrastate supply. Oh, Mr. Supplier, you should be aware of that. You should listen. You should You should be aware of this concept, that when it will be called as an intrastate and when it will be called as an intrastate. Now, my dear friend, to learn that when my activity will be called as an intrastate or an interstate, it will depend where the place of supply, in a synonymous word, in a very simple layman word, where is the destination of my supply? So if the destination of my supply will be classified as a Punjab, it will be an interstate. If the destination of my supply will be called as Haryana, it will be called as an intrastate. Now, who defines the destination? To define the destination of a various activity, the government coined the concept called as place of supply provision. So now when you will read the place of supply provision, the different activities, destination are being defined over there. So say, for example, you are providing any service, they defined in the place of supply that where the buyer's location is there, that will be called as a destination. Okay. Now, for example, you are starting a flight from a Delhi to Mumbai. Now, what will be the place of what will be the destination, the place of supply? They are saying that from the where the journey starts, meaning thereby in that case, the place of supply will be the Delhi only, from where the Indigo flight is taking off. So my dear friend, likewise, for different kind of activity, they defined that how to learn the destination so that you charge the right amount of tax rather than treating them wrongly as an interstate or an intrastate and then charging the wrong tax. You should be aware of that what will be my place of supply, so that you can assume first of all that whether it is activity an intrastate or an interstate, and then you charge CGST, SGST or the IGST in this particular kind of a situation. So my dear friend, I try to explain you the place of supply in a most lucid way with the help of an example, so that in the future also, whenever you are listening or hearing this YouTube, you will be able to, the deliberation, you will be able to comprehend that how to understand the law. Then, my dear friend, the third one is the time of supply. Now, the time of supply means when I have to pay the tax. So normally, but when I have to pay the tax, the normal situation that whenever I am claiming from the client, customer, I have to collect and pay the tax to the government exchequer. But my dear friend, the life is again not so simple. For example, you are selling the goods and you are receiving the advance 3 months in advance. You are receiving the money in 3 months in advance. Whether you have to pay the tax on advances. At times, you are getting certain security deposit which are refundable. At times, you are issuing the invoice which are continuous supply, nature of a continuous supply. So there are the many situations, if and buts, when the time of supply may be different. It is not the case that the moment you have received the money, you have to pay the tax. So my dear friend, in this different type of a situation, when you are dealing in the goods, when you are dealing in the services, when you are dealing with the vouchers, or at times what is happening that when you have supplied, but in between the rate got changed. Before you get the money, the rate got changed from 5% to 12%. But now which rate will be applicable? So all these type of situation has been handled by the provision called time of supply under the GST. And last but not the least, the most important aspect, the soul of the entire GST is the ITC. I purchased goods for rupees 1000 and paid 180 rupees as GST. Now I paid to the supplier 1180 rupees. I did the value addition on this. I did the value addition of, say, for example, 200 rupees plus a profit margin, again, say, for example, 300 rupees. And I am selling these goods for rupees 1500. And on the 1500, again, the rate of GST, let us assume 18%. My GST liability will be 240 rupees. This will be my GST liability. So I will collect the customer 740 rupees. Now the question is, I already paid 180 rupees on this transaction, the flow of this transaction. Whether again I have to pay this 240 rupees to the government, which I collected from Mr. X? The answer is no. So as this law says, the value added tax, meaning thereby that you have to tax. What is the law? This law is GST alternative name. Globally, the GST is being known as VAT. Value added tax, meaning thereby a tax on value addition. A tax on value addition, meaning thereby you have to pay tax only on the value addition. And in this transaction, how much is the value addition? The value addition is only 500 rupees. Because I purchased 1000 rupees, I am selling for 1500 rupees. So the value addition is only 500 rupees. Now I should be paying this tax on the 500 rupees. This is the reason. But how I will be able to pay? Now to answer this, the government derived a mechanism that whatever will be your output tax, whatever will be your output tax in this kind of a situation. So whatever will be your output tax is 240 rupees. You can take a claim, a set off of the ITC, that is called input tax credit, the tax paid on the inputs. That is called input tax credit, the tax paid on the inputs. You can take a set off of the same while following certain conditions and pay only the I believe this is a wrong amount. This is 270. It will come 270. So it will be 1770. So 90 rupees. So what will happen? That the government intention is to collect the 90 rupees from you because it is the only value addition done by you. So for that, they derive a mechanism that whatever will be your output tax minus the purchase tax, and whatever the rest amount is there, you have to pay to the government exchequer. So what will happen? That Mr. X who purchased this item for 1000 rupees, selling for 1500 rupees with the same rate. Now what will happen? His output liability will be 270 minus the set off of the input tax. So 90 rupees will be the amount which he will pay to the government exchequer as his final liability on the value addition portion. So by virtue of this, ultimately the government will get 270 rupees, 180 rupees from the initial stage and 90 rupees at the second stage. So ultimately the government received 270, A paid 180, B paid 90 rupees. And this is called the input tax credit mechanism. So this is called the input tax credit mechanism. There are the methodologies, there are the checks and balances, there are the conditions, eligibility criteria. You have to follow certain procedure, and then only you can claim the input tax credit, which is, I believe, is the 50% of the things. Entire GST, if you will give me the 100 marks for GST, the 50 marks is there for the ITC only. And last but not the least, my dear friends, there are the other compliances like registration, filing of return, assessment, and so on. So my dear friend, this was the helicopter view of the entire GST. If you ask me, can you explain the entire GST in half an hour or 15 minutes or like that? I will present this before you and tell you that, oh, this is GST. And I believe that by having this kind of a clarity and the discussion, each one of you is now at least having the more familiarity with the subject, that what is this subject all about. Now, my dear friend, as I explained you, now it will be much easier for you. So as I explained you that earlier there were the various taxes, center and the state level, but now all those have been subsumed. All those have been subsumed into the law and become the GST. So now what is this? There is a custom duty which is available on the imports, and then there is a GST. So now there are only two laws in the indirect taxes. For the 99% item, though the petrol and other items are still attracting the excise duty or the VAT, but 99% items today, they are either, if they are manufacturing or service or trading, then it is the GST. But if they are getting imported, in that case, it is the custom duty which is also applicable. I will take just a minute, only a break of 20 seconds, please.
Okay, sir. Okay.
Yes, sir. Now, my dear friends, continue. Let us continue. So I was discussing with you that prior to the 1st of July, there were the many laws, and now it is only the GST plus the custom duty. So what will happen that now onwards, from the 1st of July 2017 onwards, now we can classify all our activity. So earlier it was manufacturing, sale, provision of service, import, exports, and many other nomenclatures names were being used. But now the activity can be classified as an intrastate, or the activity can be an interstate, or otherwise the activity will be an import and exports. Now, my dear friend, as far as the intrastate is concerned, earlier it was excise duty and service tax was there, but now under the central government, it is a CGST and plus the SGST. So now if the activity is a IG intrastate, it will attract the CGST plus SGST. In case the activity is an interstate, earlier there was a C form, central sales tax was there, everything gone. Now it is the IGST, which is practically a sum total of CGST plus SGST, as I explained you. And in case of an import, earlier there was a custom duty, it will be continuing. And before introduction of the GST, it was the CVD, that is the called countervailing duty in lieu of the excise duty, and SAD in lieu of the VAT. So earlier what was happening, that if you are importing a goods of rupees 1,000, not only you are paying the custom duty of 12%, let us say, you are paying the CVD, that is the excise duty, and the SAD also. And then you are importing. And the CVD and SAD credit was not available. So that's why there was a cascading effect. There was an increased cost of imports. But now, my dear friend, the CVD and SAD has been subsumed into the new duty called IGST. So meaning thereby, if you are buying for 1,000 rupees, now you will pay the custom duty of, say, for example, 10%, 100 rupees, and you will pay, say, for example, 18% is the IGST. You will pay 180 rupees as a IGST, and this IGST will be available as a set off against your output liability. So whenever you will do this value addition in this, and then you are selling, what will you do? You will claim this 180 rupees as a set off of ITC. So my dear friend, by virtue of this, what happened? That our imports become cheaper. Our imports become more economical, and we can use this duty paid against our output liability in the times to come, whenever there will be the value addition. So my dear friend, by virtue of this, what is happening, that now under the GST regime, this is a very simple mechanism being introduced through the concept of GST. Now, my dear friend, as we can see the benefits, there is a widening of the tax base. There is a state governments are also getting more the revenue, And you can witness that every month we are collecting 1,60,000 crore or 1,50,000 crore of rupees, because now there is a less interpretational issue. The provisions are simple, state across the states. They are, so we call as one nation, one tax. Now, my dear friend, there is a very, very important concept which normally we are reading in the newspapers, that the GST removed the cascading effect. Now, what is this cascading effect? There will be a question in your mind that what is this cascading effect? Now, my dear friend, cascading effects are of a three nature. Please note down this point, that the cascading effects are always of a three nature. Number one, the tax on tax. Number two, the double taxation. And number three, the non-availability of the intersectoral credit. Number one, tax on tax. Number two, the double taxation. And number three, the non-availability of the intersectoral credit. By virtue of all these three, what is happening, Rajiv ji, that ultimately when I am doing a manufacturing and there is a cascading effect. So what will happen, that by force, there will be certain taxes which will get embedded into my cost. So my cost will become always higher. And if my cost is higher, because certain taxes are getting embedded into my cost, after adding my profit margin, my net sale price will become uncompetitive. Because I will be, say for example, my normal cost is 100 rupees. The 10 rupees is embedded as a tax. So what will happen? My new cost of goods sold will be 110. If I have a profit margin of 20 rupees, I am supposed to sell, I will be selling the product for 130 rupees, whether you will like it or not. So what will happen if the monopolistic activity will be there? It will be again purchased, but otherwise I will be out of the business because of the non-competitiveness of my product. So what is the benefit of the GST? That the GST removed that embeddedness of 10 rupees from the cost of goods sold. How? Let us learn. Now, my dear friend, the first example was the tax on tax. You see the earlier regime. In case of a cost of 100 rupees is there, the profit margin is 10 rupees. The A price was 110 rupees, but when he was charging the excise duty and the VAT, they are interporting on each other, meaning thereby the first I was charging the excise duty on the 110 rupees, that is 13 rupees 75 paisa. But when I was charging the VAT, it was not on the 110. It was on the, including the value of the excise duty, tax on tax. So I am paying the VAT on the value of the excise duty also. So normally VAT should have come 12 rupees 50 paisa, but it came, or it should have come 13 rupees 75 paisa, but actually it came 15 rupees 47 paisa. So the base value is different, because the base value includes the tax, the earlier tax. So meaning thereby it is a tax on tax, and that's why my price reached to the 139 rupees. But in the GST, when you are charging the C plus S, you are charging the base value as a 110 rupees. So what is happening, that 110 rupees is my value. I am charging C 9 rupees 90 paisa. I am charging the S also 9 rupees 90 paisa. So what is happening, that rather than my cost of production or my cost of sale or my sale price is 139, it will come down to 129 rupees 80 paisa, and my product will become more competitive because there is no tax on tax. I am charging the C or S on the base value. Likewise, another example, that if I am going in a restaurant, so if earlier what was happening, that when I am going to a restaurant and eating a food of 1,000 rupees, the service tax authority was saying that the out of the 1,000, 40% will be assumed as a service. Waiter charges, this charges, that charges. So 40% I will treat as a service, meaning thereby 400 rupees will be service. And on that I will charge the 15 rupees of this 15% as a 14.50 was service tax I assumed. The 58 rupees will be the service tax. And the VAT I will charge on the 1,000 rupees So it was prior to the GST. The sales tax authority, the VAT authority was saying, no, 140. I will take it 100% mine. So they were charging 120 rupees as a VAT. So what was happening that I was eating the food for 1000 rupees, but paying the tax on the 1400 rupees. 400 rupees to service tax department, 1000 rupees to the VAT department. So what was happening that it was like a double taxation. If not exactly double, it was 1.4% taxation. Whereas in the GST regime, what is happening? No, it is not the case. The 1000 rupees will be the value. So on the 1000 rupees, I will charge C. On the 1000 rupees only, I will charge S, and they will be half. Like if the rate is 18%, they will say 9% you charge, 9% I will charge. So they divided 50-50, the value, practically. So in this way, it will not be a double taxation kind of a situation. Whatever will be the sale value, the 50% will go to the state government, 50% will go to the central government. It will not be the 140%. Earlier in the software business, it was 200%. Works contract business, it was 160%, 70%. The value was assumed because both the authorities were saying, no, I am not concerned with your valuation. But now there is a clarity that if the central government is saying by 50% is my value, state government is saying yes, 50% yours, 50% mine. No problem. I will not argue that okay, my value should be 80 or your value should be 50 or 40, 30. And the last one, the cascading effect is the availability of the sectoral credit. Now let us understand with the help of this example. So I am a chartered accountant. I am providing the CA services. And prior to the GST regime, I was buying the water bottle and paying the VAT. But whether this VAT credit was available against the service tax, the answer is no. So what was there? That against my output liability of service tax, the VAT credit was not available, which I paid on the purchase of the water bottle. So what was happening? That this was not available, it was becoming my cost. So if chartered accountant is buying the 1000 rupees water bottle, actually it was not 1000 rupees. If the rate of VAT was 12%, it was 1120 rupees. So the tax was embedded into my cost. But now in the GST regime, the water bottle supplier is charging GST, the chartered accountant is charging GST, and both are set off is available. So meaning thereby, whatever the input tax I am paying, that is not becoming my cost part. That is available as a ITC for my future liability. By virtue of that, there will not be any embeddedness of the taxes into my cost. And that's why there will not be any cascading effect. So by virtue of these three, that the tax on tax is not there, double taxation is not there, intersectoral credit is now available. Now what is happening? That there will be always the ease of interstate movement. There will be the removal of cascading effect, making my product global competitive. There will be the reduced compliance cost. There will not be any entry tax lines and queues, and cost and time will be saved, because otherwise you have to pay an entry tax and there will be the huge queues of the trucks on the toll plaza and state entry barriers. That is not there. So less interpretational issues will be there. And finally, what will happen? That there will be more increased employment opportunity, the GDP will be better, the widening of tax base will be there, the revenue of the government will increase, and ultimately there will be the better kind of a situation. So my dear friend, as far as the fundamentals, what is GST all about is concerned, I try to cover in the last 60 minutes time, which was allotted to me as far as this particular aspect is concerned. Now I will be taking you some other aspects of the GST, because I have 10 or 15 minutes more available. In case Parulji or Rajivji, you feel that I should take the questions, I will stop immediately.
No, sir, you can continue, sir.
Yeah. Now, my dear friend, the next question before all of us is when to take the registration under the GST. My dear friend, there will be another question in the mind of everybody that when I should take the registration under the GST, when I am liable to take the registration under the GST, and I have the different type of activity. Say, for example, somebody is having a commercial property which is given on the rent. There is a residential property also given on the rent. There is a salary income. So there are the many type of incomes are there. How I will be able to calculate that when my liability to take the registration, charge and pay the tax to the government will accrue. So my dear friend, to answer this, first of all, please try to learn or understand this basic fundamental concept. That if my supply, if the turnover, if my turnover, I will take the word aggregate turnover later on, just to, as a layman definition, I'm giving that if your turnover is more than 20 lakhs and you are dealing only in supply of service, in that case, you are supposed to take the registration. In case you are dealing in goods only, then the threshold is 40 lakhs. But in case you are dealing in the goods or service both, then again the threshold is 20 lakhs. So this is the first concept. Now the second concept which will be there before all of us, that what this 20 lakh will constitute. Is 20 lakhs ke andar kya kya aayega? What all will be there in this 20 lakhs? Is something a question before all of us, so that we will be able to comprehend that whether I am supposed to take the registration or not. So Parulji, just to explain you as given in the section 2 subsection 6 of the CGST Act, the aggregate turnover means the aggregate value of all taxable supply. Okay, number 1. Number 2, exempt supply. Number 3, export of goods or service, exports. Number 4, interstate branch supply of person having the same permanent number, meaning thereby branch transfer. 4, to be computed on all India basis. Okay, but exclude taxes, central sales tax, central GST, state GST. And one more is there, excluding the value on which the inward supply on which the excluding the value of inward supply on which tax is payable under the person by the person on a reverse charge basis. This I will explain you. So what the law is saying, that while calculating this 20 lakhs, not only you have to include your taxable supply, but also you have to include your exempt supply. Say, for example, I am a consultant. I will give you the example on the next slide. That I am a consultant. I have a consultancy income. And then I have given my property on rent, which is a residential property for a use of residence. Even that activity is exempted by virtue of section 11 of the CGST Act. Still, that will be part of my total value, aggregate turnover, and for the purpose of calculating that whether I should take the registration or not. The third one is exports, in case I'm doing any exports. And fourth one is a branch transfer. So all these 4 will be clubbed to check whether my turnover is crossing the threshold of 20 lakhs or not. If the answer is yes, I have to take the registration, though I have to pay the tax only on my taxable activity. So it will not be a case that, okay, I will be paying the tax on my exempted activity or export of activity. No, it will not be a requirement. But for the purpose of taking the registration and paying the tax on the taxable portion, I have to calculate, I have to include all these type of turnovers which I just shared before all of you. In case, say for example, you are paying any tax under the reverse charge mechanism. Now, what is reverse charge? We will deal separately. But in case you are paying the tax, for example, you are taking the advocate service. And on behalf of the advocate, you are paying the tax to the government. That the payment of tax will not be part of your aggregate turnover that is being given here. Okay. So that reverse charge, whenever you are paying the tax on behalf of somebody else, then that will not be part of your turnover. That value will not be part of your turnover. But in case you are dealing, so I will take an example. So services provided in Delhi for 13 lakhs. Trading of goods in Mumbai 3 lakhs. Export of services 3 lakhs. There is an exempt activity of rupees 4 lakh in Chennai. There is an exempt supply further 50,000 rupees in somewhere else. So though my turnover is 23 lakhs 50,000 in total, but for the purpose of this registration, whether my turnover is 23 lakh 50,000 or I can reduce this 4 lakhs and 50,000 and saying my turnover is no, my turnover is less than 20 lakhs, 19 lakh 50,000, 19 lakhs. So I should not take the registration. So you can see. So here, my dear friend, I wish to convey you that you have to include these two as well for the purpose of this aggregate turnover, and your turnover will be treated as 23 lakh 50,000, not 19 lakhs. You have to include both taxable and as well as exempt, exports, everything into the consideration to arrive a value when I should take the registration. This is I wish to convey you, explain you through the help of this example. Now, my dear friend, as I explained you the supply definition I have covered. So there are many other things related there too. But just to share with you that when we are discussing about the supply, the next concept is the different type of supplies. What is this different type of supplies? I will explain the last two. Because the taxable supply means the supply which attract the GST, or exempt supply which doesn't attract the GST. Interstate I already explained. Now third one, Rajiv ji, is very important to learn, that is composite and mixed supply. What is this meaning by a composite and a mixed supply? There may be a question in the mind of our audience. Now, my dear friend, let us say I am going to purchase I'm going to market to purchase the milk. Now, when I'm buying the milk, he will give me a pouch. Certainly, otherwise how I will be able to buy the milk? The milk will be there in a plastic pouch. थैली जिसको हम बोलते हैं. Now, in this purchase, you will agree with me that this is a principal supply. Because ultimately I went in the market to purchase the milk only. And this is the incidental supply. Now the milk pouch is having a different HSN code. And milk is also having a different HSN code. But here this principal and the incidental supplies are naturally bundled. They are naturally bundled. So if the principal supply and the incidental supply, though the different HSN codes are there, but they are naturally bundled, in that case, that supply called as composite supply. If the principal supply and the incidental supply are naturally bundled, in that case, that will be called as a composite supply. And what will be the rate of tax? The rate of tax which is applicable on this principal supply. So if the principal supply attracts 5%, incidental supply attracts GST at the rate of 18%, it will be the principal supply rate. It will be the principal supply rate which will be applicable on this activity and on the entire milk price, entire value. Say, for example, you are buying for 100 rupees. The 100 rupees will attract the GST at the rate of 5%, not at the rate of 18%. But in case it is a mixed supply. So now learn mixed supply. I went into the market wherein they are giving the shoes with the socks. And they are saying that the shoe is 1200 rupees. GST is, let us say, 12%. Socks is for 200 rupees. Let us say the rate is 18%. But I will give you a combo. I will give you a combo for 1300 rupees. Wherein with a pair of shoes, the socks are free. So for shoes and socks free. I am saying this. Now, my dear friend, in this case, there is a different HSN code for shoes. There is a different HSN code for socks. But whether they are naturally bundled? No. I can always buy the shoes only. There is no compulsion on me to buy the socks. So what is happening? That there is a artificial bundling. There is a artificial bundling here, wherein the shopkeeper deliberately bundled the two items, two HSN, the two different HSN with a single price, which is not a naturally bundled. In that case, that is called the mixed supply. And in this case, what will be the GST rate? It will be the highest. So highest of these two. So meaning thereby, it will be the 18% GST, which will be applicable on this kind of activity at the rate of 13%. Though you are buying shoes, the shoe may be a main product for you. But since there is an artificial bundling happening, and as per the provision of Section 8, this will be classified as a mixed supply. And in this case, it will be the highest of the rate which will be applicable, meaning thereby out of 12 or 18%, it will be the 18% GST, which will be there on this particular activity. So my dear friend, this is called the difference between a composite supply and a mixed supply. And last one, the zero rated. The zero rated means exports. So if you are exporting any activity, you are doing export of goods or export of service, they are being classified as a zero rated supply under the regime of GST. So there will be a nil rated supply. There will be a zero rated supply. Nil rated means when the rate of GST is 0%. When the rate of GST is 0%, it is called nil rated. But in case the activities are exported from outside India, then they will be classified as a zero rated. So there will be always a difference. We need to learn the difference between a nil rated and a zero rated supply. Then, my dear friend, there are many other concepts which I may discuss with all of you. And I believe that my time is also more or less 72 minutes. So should I take the queries, madam? I believe that there are 25 chats.
Yes, sir. But most of them are, chats of gratitude for you. And they have given their wonderful comments regarding the insightful session that they've gained from the session. However, sir, if you allow me, I've got one simple question which I would question. Sir, I just want to know that if I'm a, someone who's starting a new business and a small scale business, is there some kind of, tax benefit or tax relief that the government, gives someone who's, going for a startup or?
No, Parulji, as such, there is no incentives available. Apart from the threshold which is available, that before you reach to the level of 20 lakhs, there is no tax. Beyond that, as such, no incentive is there under the GST regime that, okay, you are a startup, so you are not supposed to pay any tax or something like that. The tax will be there. The moment you will cross the threshold of rupees 20 lakhs.
Thank you, sir. I would now request Dr. Rajiv Nayan.
Parul.
Yes, sir.
You asked for the participant already. 50 people are joined here. If they ask any question.
Yes, sir. I've posted it on the YouTube also.
If directly they will ask, they can ask.
Because if anyone wants to ask any question, they can unmute themselves.
Hello.
Yes, sir.
My name is Dr. Sukesh. I am from Mangalore, Karnataka. I have a question in relation to schemes, composition scheme. A startup person can get benefit in relation to no.
So, Sukeshji, as far as the startup is concerned or any other organization is concerned, they can always go for a composition scheme in case your turnover is below a threshold level. So say for example, your turnover is less than ₹1 crore, you can always go for a composition scheme. The only challenge which I just wish to share with you, that in case you are in a composition scheme, number one, the loss will be that you cannot collect any tax from your buyer, number one. Number two, whatever the purchase tax you have paid. So you say, for example, you purchase for 80 lakhs rupees and you are selling for 90 lakhs. So on the 80 lakhs rupees, whatever the GST you have paid with a full rate, that will also become a part of your cost. So you will not be able to adjust that against your output liability. So there may be a situation that your entire profit margin will be eroded because of the taxes getting embedded into your cost. So that depends on a case-to-case basis, which type of activity you are there. If it is a more of a labor-oriented activity, then you can always go for a composition scheme. But in case the activity is more of a product-oriented, then I believe I have a doubt that whether you will be able to take the benefit of this composition scheme.
Thank you, sir. Sir, there is
So
one
there's
more
a
question.
Yeah, I'm taking the
Yes.
question from Hemakant Gavdeji.
Yes,
Sir,
sir.
if a purchasing Zoom paid version and it is a foreign entity, what about GST here in India? So it will be paid under the reverse charge mechanism. In case you are buying from outside India, any activity or any goods or any services, and that activity otherwise is taxable, but since it is being imported, then the supplier will not take the registration in India. It is the buyer who will pay the tax as a recipient under the reverse charge mechanism directly to the government. So what will happen that you will pay 1 lakh rupees to the Zoom and 18,000 rupees you will pay to the government exchequer directly.
Thank you, sir. Any more questions?
There may be a situation,
Hello,
Hemkanji, just
sir.
to share with you, that the Zoom is having an office in India as well, and they are billing from India. In that case, they must be charging the GST. So you have to check whether the Zoom is charging the GST or not. In case they are not charging, then you have to pay under reverse charge.
Hello, sir.
Yeah.
I am Armatappa, assistant professor from Karnataka. Can you explain once again difference between nil rated and zero rated supplies?
Yeah. So nil rated is a supply which attracts the GST at the rate of 0%. So slab is 0. So meaning thereby 0, 5, 12, 18, 28.
Yes.
So when the slab is 0, it's a nil rated. When you are exporting, it is 0 rated.
Okay, sir. Thank you.
Thank you, sir. I think those were the questions from the participants. We don't have any questions from the YouTube participants who've joined. So with this, I would like to invite Ms. Ruchika Bal to give a formal vote of thanks. Over to you, Ruchika.
Thank you, Parul. Sir, the session was really thorough and explanatory. On behalf of Teaching Learning Center and Department of Commerce, Ramanujan College, University of Delhi, and FSC College of Arts and Commerce, Ulhasnagar, Maharashtra, I really feel delighted to take this opportunity to extend formal vote of thanks for today's session. I would like to express gratitude to our resource person, C.A. Atul Gupta ji, for taking out his valuable time and enlightening our participants with all the relevant concepts, calculations, law and practices related to GST. Thank you so much, sir. I would also like to thank our honorable principal, Professor S.P. Agarwal, for his constant support, our convener for this refresher course, and teacher in charge of Department of Commerce, Dr. Rajiv Nayan, for organizing this wonderful program, Dr. Parul Yadav for hosting today's session, our members from the technical team for their continuous support during the session, and all our esteemed faculty members and participants who have joined today's session. Thank you, everyone. Thank you. Parul, can we? I hope this is the end of the session. So I believe, yeah. So with this, sorry, are you saying something, Parul?
Yes, we have come to an end.
Okay, thank you everyone for joining us today. So I believe this is the end. So we'll be ending this meeting now. Thank you.
Thank you.
पारुल पहले बंद कर दो वो YouTube.